board and he'll fill in for you.
Can you talk a little bit about Bitcoin or cryptos today?
I will be, absolutely. That'll be part of the topic at the very beginning. Bitcoins and the Bitcoin bubble. And guess what? Let's see if this will be a better view. I am that little bit over here. No, no.
Okay.
All just words and ideas.
You got it. Leave it on for the phone, or would you like to wait along there and walk around?
No, I'll probably just stick around here. Yeah. I'll carry this around with me like a rock star.
Like that, yeah. And when you're done, make sure to drop it.
That's always the plan. Always the plan when I speak, to be able to drop them.
Guys, let me know if he really does that. Yeah, I'm gonna turn this off, okay?
Okay. Run by and slide on my knees. Bruce Springsteen like. How are we doing on time?
Yes.
Is it 1:30?
129.
1:29. A few more people coming in. At least one.
Still have a couple minutes.
All right, I'll wait. I'll sing a song here. I don't think Hank done it this way. Yeah. We did a cover of that. I have a rock, rap, country, folk band called the Muddy Souls, and we just do whatever we want. And one day we decided we liked the riff on that. I don't think Hank done it that way. It's just two chords, and F, B, F, B. I think that's all the song is. Anyway, we did a cover of it. It sounds pretty funny. It's a rap song with Waylon Jennings as the underlying.
That song's about 40 years old, isn't it?
I bet at least,
Yeah,
right?
yeah.
Probably mid-70s.
Yeah.
Is that right? Do you know?
That's about right. We're going to have to Google it.
Always the easiest thing these days.
Always.
Alexa. Oh, crap. It's part of my speech today, though. I will be talking about the voice revolution, how important Alexa and the ability to speak to all of our devices is about to become. He asked me if I wanted to walk around. It looks like I'm going to. All right, we'll wait 30 more seconds, and then I will give you guys all of the keys to making 1,000% returns in the next year, guaranteed.
I would use some Bernie Madoff advice.
Yeah, actually, I'm promising more than him. He was only 8% per year, so I'm better than Bernie Madoff. I have another song by the Muddy Souls, as a matter of fact, called Just Ask Bernie Madoff. It's pretty funny. We used to play it on my Fox show. Everybody's getting theirs, but you ain't getting yours. All right, let's go ahead and get started. Look, the topic is the next great tech bubble is already here, but it ain't over yet. As I've been writing about for about 10 years, ever since the bailouts, and we went to 0% interest rates and emergency measures and everything else, along with over the last 30 to 50 years, there's been a nonstop march by the Republican Democrat regime, both being completely owned by their corporatists and their lobbyists and the people that run and give them money. It's been an overriding theme that we have had ever bigger focus on corporate profits and the stock market and propping those things up in the name of making a great economy for middle class or something like that. But it's a continual thing. And I've been calling it the eco-techo bubble should be coming. And we're here. This is the eco-techo bubble. Starting about 2010, 2011 is really when I went on, I left Fox in 2010 and started trading again. I didn't trade stocks, or I didn't even own any stocks. I sold everything before I went to TV because I didn't want to sit there and have to try to be honest and bash Apple and Google and everybody else while I owned their stocks. I've found since then, I'm happy to bash Apple and Google and own their stocks simultaneously, but at any rate, since 2010, I've been saying that we are about to enter another great tech bubble. Slowly but surely, it's been growing and climbing. And in 2017, 8 years after the bottom of the stock markets, we're here. We are in a bubble. Let's just keep it real. Bitcoin's gone from 100 to 4,000. Look at the cover of The Economist this week, and it says, the great inflating assets, everything going up, the bull market and everything. I think that was actually what it said. I would have been bearish. I would have decided that was a very bearish column, by the way, in a contrarian kind of way, had it not then had the question, how long can it keep going or something. At the bottom of the quote, there was negativity. They were skeptical about this bubble. So as long as there's skepticism, the bubble can keep going. Stepping back and sort of trying to put ourselves where are we in this cycle? 7, 8 years into a inflating market that now is spiked into a tech bubble, Bitcoin bubble. And by the way, I'm bullish on technology and I'm bullish on Bitcoin long term. But that has nothing to do with where we are at this very moment and whether or not I think it's a great buying opportunity and you guys should be buying NVIDIA, Bitcoin, and Tesla or something. So, the nuances and the month-to-month stuff from the Federal Reserve or the employment numbers and all of that stuff is noise. I don't read it. I don't care. We know that the Federal Reserve since 2011, 2012 has been in a tightening phase. People don't believe that. They thought that you had to wait until they started bumping up interest rates by 1/4 point from 0 to be in a tightening phase. But even before that, when they reduced quantitative easing, that was a form of tightening. And that made me very bullish because everybody who thinks conventional wisdom about the stock market and the Fed is wrong. For the last 30 years, every time the Fed is tightening, at least for the vast majority of that tightening cycle, stocks go through the roof. Stock markets go through the roof. Every time the Fed is cutting phases, let's say 96 to 99, the Fed was tightening. What did the stock market do? We were going into the dot-com bubble. Late in 2000, stocks started crashing. March 2000 was the top, and by 6 months later, we were in a real bear market. What was the Fed doing? Cutting rates like crazy. Cut rates for the next 2 years. What did the stock market do? Crash. NASDAQ was down 75% from its high in March 2002 to its low in March 2000 to its low in October 2002. When, by the way, I just happened to have launched a technology hedge fund. Better to be lucky than good sometimes. At any rate, they started tightening again in 2004, 2005, 2006. They continued tightening. 2007, still tightening. Stock market through the roof. 2008 hits. Stocks start crashing. What's the Fed do? Cut, emergency measures. So fast forward to today. The Fed still has every single emergency measure they put in place from the year 2000. Think about that. Corporate profits and bank profits specifically have been at record highs for 5 years in a row. And we still have every single emergency measure from 2008 in place, propping up, subsidizing, and keeping those profits up. That's what makes bull markets. That's what makes blowing bull markets, as I like to call what we've been in. Federal Reserve continuing to tighten here and there. I don't care whether they tighten next month. They're reducing their balance sheet. $5 trillion balance sheet. It's going to be with 0 at some point. Well, probably not ever 0. But at least they're going to reduce a couple $1 trillion of their balance sheet, which is a form of tightening. They're not putting cash into the economy like they were. Less cash from the Federal Reserve, less liquidity, theoretically, blah, 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 blah. One thing to keep in mind is after 8 years of emergency measures and near 0% interest rates, little bit of taking some water out of the system isn't really going to do much. Really, liquidity. Think about it. It's the fields are still flooded. There's still more water than there needs to be out there. We can get down to several $1 trillion away from where the Federal Reserve balance sheet is at some point, and where at some point in the next year to 3 years, I would assume, we finally do get a little break. We do get a black swan event or something that does at least put a top in the market for a little while. And then if we can just get a 10% or 15 or 25% correction, and the Chinese are not buying treasuries anymore, and there could be something that the Federal Reserve says, well, we better get back in, start putting trillions of dollars of taxpayer money back into the banks again, and try to turn it around. And then you probably ought to be really, really bearish at that point, because the Federal Reserve is now loosening, not tightening. So as a general rule of thumb, I don't like to have general rules of thumbs, but as a general rule of thumb, I expect that, as a general rule of thumb, I want to be bullish and bull when the Federal Reserve is tightening and bearish when they're loosening. And we're tightening, so I'm bullish. Still am. Now that being said, let's just catch our breaths by ourselves for a minute. If you bought NVIDIA 18 months ago, like Trading with Cody subscribers and myself did, if you bought Axogen, talk more about a small cap company in a second, Axogen, AXGN, it's up 500%. I'm not telling you to go buy it. We bought it at 4, it's now 19. If you bought Bitcoin at 100, or as I did, took payments. I service Trading with Cody's $99 a month. I used to charge 1 Bitcoin per month for my service because Bitcoin was 70, 80, 90, 110 bucks. So you could just send me your Bitcoin instead of cash. I held on to those for a while. Started selling them about, 6 weeks ago at $2,800. I should sell some right now. Haven't looked at Bitcoin today. I don't really care what it is at today. Whatever it is, it's a sell right now for the near term. Mentioned a minute ago, though, I'm very bullish about Bitcoin. How can we reconcile this? We can hold two thoughts in our own heads at the same time, right? I was very bullish on Amazon's long-term prospects in March 2000. Stock was at 100. It eventually dropped to 6, under 10, I'm sure. Now it's at 500. So many great .com stocks got crushed like that. I bought Apple myself, trade at $1 per share, March 2003. Company had it's at $15 per share cash at the time, and it's trading at $14. Split 7 for 1 and 2 for 1 in the time since. So my cost basis adjusted $1. Now, horse, just a second. It's hot outside. I sweated a lot getting over here today. But if you bought Apple 2 years earlier, you paid $50 instead of 14. Split adjusted, 50 divided by 14, help me out, someone, 3 something. So your cost basis is $3 if you bought it even after it tripled. But before Apple was at 14, it was at 50, right? I mean, it crashed. Things can go up after they crash. That's what I expect from Bitcoin. I don't know if this is the top. I frankly don't expect it is. I think it will get to almost $10,000 per Bitcoin before the end of the year. Feet to fire guess for you. I'll sell everything but my one last Bitcoin, I suppose, at that point. But then you get the reverse. At some point, Bitcoin, technology, NVIDIA, Apple, Google, Facebook, they're going to be hated again. I've seen them hated 3 or 4 different cycles in my life, not Bitcoin, it's new. But technology stocks come in and they come out. Bull markets come in and they go away. So I'm not going to play it this way, but if you want my best feet to fire guess, want to trade Bitcoin, you should buy it right now, sell it when it gets to 9,000 at some point in the next few weeks or 2 or 3 months. Short the heck out of it till it's under 1,000. And somewhere in the year 2019, we all get to go in and start buying our Bitcoins at $300, $500, $700. And when I'm on my deathbed, hopefully in 50 years or 100 years, who knows, Bitcoin's going to be worth 100 grand. So I can have my cake and eat it too, by the way, because I'm up here talking about this stuff, no real money about it. No matter what happens, I just told you that's what's going to happen, I suppose. Honestly, though, that's my best guess. If you want to try to do it, go for it. I don't think that's a very good risk-reward scenario, though. I don't see a lot that makes me want to put money to work right now. In 2010, 2011, even 2012 and 13, you guys who used to come watch me at the Money Show give these talks, I was jumping up and down bullish, saying we're going into a bubble. This is early. Let's buy. We've got a revolution going on in the app world. Smartphones are changing everything. Shut up and buy Apple or any app-related stock in the world. And I don't see that now. I don't want you guys, or me, I've trimmed. I was 150% net long in 2010. I'm more about 60, 70% net long right now. Probably 10% shorts, 20, 30% cash. One thing I always tell people when they talk to me, Cody, how much cash do you have? You know, I make money every year too. I have cash in other places. I have assets in other places. Cash is a relative thing. And so when I say I have 20 or 30% cash, it doesn't mean anything. I hope you know that. It's more cash than I used to have. Let's put it that way. As a percentage of my portfolio, I am much less exposed to the stock market than I used to be. Should you try to copy my portfolio? You can see every position in order from largest to smallest, including shorts and options, which I don't own any options right now, at tradingwithcody.com. And then people say, well, Cody, how much, why don't you tell us what percent of your portfolio is in Apple? And then I go, okay, number one, I'm not you, you're not me. My own personal risk profile has morphed tremendously in the last 5 years. 5 years ago, 7 years ago, I was a rock star TV Wall Street guy, single, out of care in the world, rocking and rolling and partying. It's great. I am a father now. I have a medically fragile 2-year-old with trisomy 13, who's a miracle she's even alive. But I have nurses that take care of her 6 nights a week and 5 days a week. And I don't have the same risk appetite I did 7 years ago. So what difference does it make how much my own personal portfolio is in Apple when you put it in that context? Should you own some Apple? Yeah, probably. Even now, probably. Apple will be $1 trillion company someday, probably a $2 trillion company. I expect there will be 10 or 15 or 20 United States-based $1 trillion companies in the next 5-7 years. Probably a crash in between the time now and when we get there. Amazon, Google, Apple, Microsoft. I don't own Microsoft. I've owned the other 3 for a long time, and I still do. And I think there'll be $1 trillion companies. I think there'll be several $1 trillion companies in China. I don't own any of them. I don't like to invest in China. It's hard enough to believe and trust the companies here in the United States. What am I doing on time, folks?
146.
I'm only 16 minutes into this. I got 14 more minutes to tell you. And at any point, you guys jump in with questions. I love to engage with you. Okay, I'll get back to where I was going.
Okay. So I do know you're not very bullish right now in Bitcoin or the market, but now how quickly or how hard is it to unwind a position though? Because I'm almost thinking that, let's say you were on Apple, you know, and you're riding a wave up, or I'll do something that's trending up a little bit stronger.
NVIDIA.
Okay, NVIDIA, okay. So, what do you feel about, you know, setting a particular stop just to track below it, and let it get you out of the market, you know, when it does crash per se, you still miss 9%?
The question is, look, how quickly can you get out of these stocks when they turn, and or should I put in a stop loss underneath, a trailing stop loss underneath as NVIDIA goes from 30 to 50 to 100 to 150 to 180 and protect myself on the downside? NVIDIA is actually a great example of the reason why you should not use stop losses, even in the last 18 months. I bought it at 30. It went to 50 and I trimmed, I think, 5% of it. It went to 99 and I was like, this thing is almost triple market cap. I told you guys I thought eventually it could have a triple market cap. Triple digit market cap is what I'm trying to say there. $100 billion market cap. And so I trimmed a little more. Immediately it went up to like 125 and I felt stupid. Why had I sold even 15% of it? Of course, then it went to 80, 81. Remember Citron's Andrew left, who this week attacked Shopify? Probably rightly so. I'm sure Herbalife, he's been attacking that one too. He was long NVIDIA for a year, had a triple in it, and when it got to 125, I think is where he had released, hey, this thing's way overvalued, way ahead of itself. It should be back at 90, which I don't like. I actually lost a little respect for Citron's Andrew left on that because I thought he was betting against like concepts, not trying to navigate a 30% swing in valuation, which I don't think is a reasonable thing to try to do in a overloved, over-momentumed, giant growing revolution company like NVIDIA. At any rate, he nailed it. It did go back below 90. And if you had your stop loss in there at 115 when it hit 125, you're out. Would you have had the discipline to buy it back? And that's why I don't use stop losses. I've never put a stop loss order in, maybe in 15 years was the last time I did a stop loss order. I look at my stocks every day or often enough that even when I'm traveling, if I'm on vacation, I'm probably going to look at some point. And I'm not, like I've made my bets. I've done my homework. I've studied these stocks. And I want to take advantage. I like to, what I say, have my cake and eat it too. So I'll trim a little and then feel stupid when it goes up, but then remind myself, I still own 85% of the shares I bought at 30, and it's now at 185. And I'm going to sell some more. I'm going to sell another 5%, and I don't care if it goes to 250 tomorrow after I sell 5%. That is not true at all. I will care. It will make my stomach hurt. But I'll accept that because I'm handling my risk rewards and trying to maximize my upside potential while minimizing potential for losses. And I don't think stop losses, trailing stop losses, is the way to do it because stocks, another example I would give you is, I don't even remember what this, AFCI, Advanced Fiber Communications. Wow, blast from the past. They were bought by someone many years ago. 2004, I owned it and I had a triple on it. And I had a trailing stop loss on it, 10% below. I think it went from 20 to 50. So at the moment, my stop loss was at $45. Pre-market, Nortel or someone made an announcement. They were fraudulent, something, whatever it was. AFCI opened at 43.50 that day, closed that day at 52. I was out. Went on to 120, and I was out. I don't like trailing stop losses. Now, that being said, maybe instead of selling 5%, put a trailing stop loss on 5%. Don't do the whole thing. There's something to be said for that. Again, I like to sell when the stock's up 5% and in the green, and I feel like I'm selling to those idiots who are buying it right now, and rather than going, oh, I'm going to join the sell-off today when it's down 10% and sell 5% of mine. But it's a psychological thing in that regard. And truly, if you're betting and believe in your analysis in the company, just don't sell all of it ever. That's the main thing. Yes.
Never mind the crazy up, C, down stock market. What about NVIDIA? Is that one of the greatest companies on earth? Does it have great potential? Forgetting about the stock market.
I think it's way too early to call it one of the greatest companies on earth. I think it has potential to be. Greatest companies on earth are worth $500 billion at this point. NVIDIA's, this very moment, does anybody know, maybe $120 billion market cap? Whatever. Slightly, it's a triple digit $billion market cap, okay? But it's not one of the greatest yet.
Well,
I do think it could, over the next 5 to 10 years, go up threefold, fivefold from here still. And then it would be a 700. NVIDIA could be $1 trillion company in a bubble blowing bull market in the year 2023 or something, 2025 even. It will come down to how quickly they can grow and how quickly they establish themselves as the de facto standard that everybody has to use for, say, the next 10 or 15 years when it comes to self-driving cars, artificial intelligence, deep learning, all of the stuff that NVIDIA was betting on 5 years ago and is now positioned to win. That doesn't mean they will win. They are still competing against Intel. And if you guys remember the lessons over the last 10 years, even in the server world, I remember thinking, I can't believe that Zuckerberg would want to design their own servers, their own chips. Why is Apple making their own chip, the A9, which at the time or whatever? There's certainly the potential over the next 3, 5, 10 years that someone, an established player or another startup, comes up with a better mousetrap on the chip side of things, on the software integrating with the chip side of things. Software and chips and hardware integrated together or separated, layered on top, all of the different ways you can do that stuff. Those will come into play. And that's why we can't just go buy NVIDIA and walk away and know that in 15 years you'll make a lot of money. No, you got to pay attention. You got to do your homework. You got to follow every nuance, everything. Let me back up. Not every nuance. Ignore the nuances. But if the general trend is, look, NVIDIA is set up to become the de facto standard dominant player in 3 or 4 of the fastest growing industries, the most revolutionary things that might happen in the next 10 years, and NVIDIA is primed to help that stuff happen, that's probably a bet you want to have at least a little bit of. Now, again, I bought this thing at 30, and it's now at 185 or wherever it is. And I'm not telling you guys, go out and buy it and we'll make a bunch of money this month or by the end of this year. But yeah, I do think you want to have revolutionary, incredible companies that are positioned for these revolutions that can grow 50 or 100% per year. The industry itself could. You want to have that in your portfolio. Ride the wave, keep your bucket out in front of it, and know there will be times when you feel really stupid for doing it. Yes.
For cryptocurrencies, I know the popular ones are Bitcoin, Ethereum, Litecoin. Do you recommend any of the smaller ones like Ripple and?
No. That just cut you off before you list all of the ones that I will not recommend. No, no, and no. I never traded them, and I would short them and come back and look in 5 years, and I think you'll be making a lot of money. The question is, besides Bitcoin, Litecoin, and Ethereum, are there any of the more obscure, can I call, the less mainstream? Man, I'm going to come back to that point. Bitcoin is now mainstream. Less mainstream cryptocurrency options out there. And I'm not even going to let you say the names because, number one, I don't know if you were making them up when you say them because I have no interest in any of them. Blockchain, certainly the concept of blockchain, which is what cryptocurrencies, most of them are built upon, including Ethereum and Bitcoin. I believe in it. If you heard George Gilder speak yesterday, he really illuminated some stuff on remittance and payments and the elimination of fees and transaction and friction costs that go along with that stuff. But to come back to it, I think that Bitcoin has probably established itself as the de facto standard cryptocurrency already. Ethereum might be a secondary kind. It's not just a cryptocurrency, right? It's a little more complex than that. I don't understand what you're investing in when you buy Ethereum, and so I am not buying Ethereum. I have no interest in it right now anyway. I think it's bubbled up, and we'll get a chance to figure it out and buy it much cheaper in coming years. Bitcoin I'm selling right now, even though I do think it is the de facto standard. In order for one of those other cryptocurrencies, even Litecoin, to actually become something meaningful, I think would be a miracle. To overcome, Bitcoin is Google. Bitcoin is Amazon. So, those other ones are Yahoo. Yes, I saw your hand up first.
On Bitcoin, I heard something this morning that was very, very interesting, in that Bitcoin is nothing but software code, and there's only 21 million pieces of code. And I found that very interesting.
So, that's an interesting way of phrasing it, and it would be like everything with this stuff. What's your definition of 21 pieces of software code? The question is, he was saying that, look, there's only 21 million pieces of software code underlying the Bitcoin blockchain concept. And that might be true. It might not be true. It depends on how you measure it. But whatever it is, at this point, Bitcoin has proven itself. It works.
No, and they did say they thought it was the standard.
And that being said, by the way, guys, I love George Gilder. He was an inspiration to me, frankly. I copied him tremendously when I ran my Telecom Connection newsletter back in 2002 to 2005 for thestreet.com. And one of the things I used to say back then are relevant today. And that is, the people who listen to George and the concept of telecosm and his incredible stock picks from 96, 97, 98, 99. If you listened in 99 or the year 2000, you lost everything. Those stocks were down 90% at some point. And where he missed, and when I remember writing about this, when I launched my Telecom Connection newsletter and talked about how I thought George Gilder was right about so many things, but where he was missing was not paying attention to valuations and cycles of the economy. And I think that's the point I'm making up here today. And I didn't realize when I got up here today to talk about this, that was actually going to come together like that. But that is exactly what I'm talking about. I believe in blockchain and I believe in Bitcoin, and I have for 5 or 6 years. But where George Gilder and myself have really parted recently is I don't think it's a good risk reward to buy Bitcoin, even if it's going to 10,000 right now. I think it will crash. I see everybody in here asking me about Bitcoins. It's mainstream for investors and traders to own and trade Bitcoin in 2017. It was mainstream to own and trade .com stocks in March 2000. I don't know if this is the top, and I have no idea how we will actually know when the top comes for blockchain Bitcoin technology. But my instinct tells me, my experience tells me that George is right, but wrong about the timing. He was telling you to buy Bitcoin 5 years ago too. And I'm telling you now, as someone who at the time was buying Bitcoins at 100, to sell them, because I don't like this time of the cycle. I don't like this part of the valuation. It reminds me of the .com bubble, the top.
So what are the ones that you're looking at now that are the next NVIDIA?
We'll sign up for his.
That's why we're here, right?
Well, exactly. You guys paid the big bucks to get the stock picks. And I hope you're getting value out of the fact that even as someone who loves technology and investing in revolutions, I'm not bullish, and I don't feel good about giving you stock picks today. That's one of the reasons I'm hesitating even answering your question, is because I don't want everybody going out and buying a stock that's up 500%. Now, that being said, Intel. I think Intel's been left for dead. They've repositioned themselves. They've spent 25, 30% of their market cap buying self-driving and IoT solutions and platforms that they want to become de facto standards in. And I do think, and in the meantime, you get a 2.5%, 3% dividend. Valuation's cheap. Another stock that I'm buying, just today. I can't believe I'm telling you guys this. Trading with Cody subscribers, cover your ears. In all seriousness, you guys, go to tradingwithcody.com, and every time I do a trade, this morning I sent out a trade alert that I am buying Verizon. And that's exactly the reaction I hoped for, and that's exactly the reaction I've gotten.
I just like the
I do love the 5% dividend. I wanted to say, though, that was, I kid you not, I will never forget when I bought Apple at $14 a share. I bought common stock and call options dated out 6 months, and explained the stock was at $14. They had $15 net cash per share in the bank. And I got an email immediately from a hedge fund buddy of mine that said, "What the F are you doing, Apple? The Newton? What are you doing? Steve Jobs? You're an idiot." And I was like, I published that email at the time. I was like, this is the ideal email that you want to get when you buy a stock. And that is the ideal reaction I want to get when I buy a stock is, what? Yes, Verizon is going to be the best 5G play in the United States. They have bet billions of dollars buying spectrum, putting in fiber optic plants, and getting ready to put in more fiber optic plants for the backbone, and to be the IoT 5G voice communication platform that we all are using because it's better than AT&T, which is focused on satellite bundling. And I have an app company called the IM app. We make apps for celebrities like me. Just kidding about the last part. I actually do have an app. The IM app, the IM Cody Willard app, it's live streaming the speech right now. It's also live streaming on YouTube via my app. Point of the story is Neil Patrick Harris, my oldest friend in the world, and we're still great buddies. And he was the first one who joined my platform besides Carl Reiner. We now have 250 celebrities on the app, from 50 Cent to Carly Simon to Robert Downey Jr. and a bunch of people in between, like Cody Willard. Every time I live stream, I run into bandwidth problems. I watched Neil give a live stream last week. He's interacting with some girl in Israel. We have this interactive live stream. It's basically watching people do FaceTime, and he can accept people calling in and engaging with him and FaceTiming him, and all of us get to watch it and then rewatch it later if we want. He spent about 5 minutes railing against, why isn't there any bandwidth anymore? How come I can't get live stream? And he's talking about it, and the whole time I'm going, every time you can't get on the internet and download a movie fast enough or upload something fast enough or whatever it is you're doing, there is the best investment opportunity for the next 10 years, bandwidth, 5G. And the best company to play it, I think right now, is Verizon. I get a 5% dividend. The stock's gone nowhere in 15 years, and they're finally poised to grow. Now, before I move on, their AOL and Yahoo stuff, I predict in the next 2 to 3 years is written off for worthless and or sold for pennies on the dollar. I don't care. I'm buying it for the 5G revolution. You had a question. You might have had one. I got the guy in the back of the red, please.
I'm an individual investor, like a lot of people. Time is my most valuable resource. You said you got to keep up with things like NVIDIA and developments. Other than look at ETFs and see what the better stocks are listed there, how do I keep up with my limited time resources?
The question is, how do you stay up with the homework on NVIDIA and all these other stocks as a retail investor, perhaps a professional doing something during a day job? Even if you're retired, you don't want to sit around researching stocks. You might want to go golf, see the grandkids. Subscribe to tradingwithcody.com. In all seriousness, I'm being serious. That is, I do my homework, and you can ride my coattails, and I'll be wrong sometimes, but longtime Trading with Cody subscribers, we have made a lot of money investing in these revolutionary companies and staying on top of them, trying to have our cake and eat it too, trimming great times, buying terrible times. Other than that, there is no easy answer. If you don't stay up with NVIDIA's positioning and its roadmap and how it's roadmap is going to evolve as Intel is trying to take over everything that NVIDIA wants to do, and you will end up losing money at some point. I mean, you've got to do your homework. You got to stay on top of stuff. There is no easy way to do it, unfortunately. I don't buy ETFs either, and that's because, as one of my best mentors used to tell me, it's the lazy man's way of investing. I do my homework. I don't want to find the Verizon. I don't want to buy a telecom basket. AT&T's in it. I'd rather buy Verizon and short AT&T maybe. Not short AT&T, I'm just saying. It's hard. It's hard.
It's a good strategy, is look at an ETF, pick the best, and better stocks and all.
No, because again, how do you know if it's ETFs, when I bought Facebook, one of the reasons, it was at $25 a share when I started buying it. By the time it got to 2018, I was buying call options. I made it the third biggest position in the Trading with Cody portfolio, my portfolio. And at the time, I remember writing, this is something that every money manager and ETF is going to have as one of its biggest positions in 3 years, and I want to be there before they are. So now you go look at the ETFs, and Facebook's going to be listed as the top 3 positions, and it's already up 600% from where I bought it because we tried to get ahead of the curve on it. And guys, again, look, I make mistakes. I've bought stocks that have gone down. I owned Fitbit. But we've had some heck of a ratio of winners to losers and some big winners, and I just think anybody who's bought stocks 5-7 years ago probably has some big winners too. So don't want to make you look like I'm just a genius. Don't let bull markets fool you for being a genius. Don't confuse bull market for genius. Is that the phrase I'm looking for? You, sir.
Yeah, where do you see Apple? I know you've talked about Apple. Where do you see it long term? I have a discussion with my brother all the time. He owns Apple. I've owned it in the past. But since Apple's gotten so big, I mean, I just can't see that it's ever going to experience the growth rate that it has in the last 10 years because it's gotten so big. And I've read things that it's possibly going to become like Microsoft. It just got so big and it's just not growing anymore. And Steve Jobs, the innovator.
So the question is, look, what's the outlook for Apple long term over the next 5 or 10 years? Can it innovate? Can it continue to disrupt? George Gilder said something yesterday that stuck in my craw, and I've been chewing on it for the last 24 hours, and I'm going to have to be doing a lot more analysis. And it comes back to your question. He talked about Life After Google. It's his new book, and he just talked about how the concept of silos on the internet, from Facebook, Amazon, Google, Apple, trying to keep you in line, is ending. I used to call it the end game of the internet is the empowerment of the end user. That's not nearly as sexy as might be, but I wrote, go to search Cody Willard Financial Times empowerment, and I wrote several articles about this for them 10, 15 years ago. And where I was right is what George Gilder is getting at. Over the long term, controlling people, actions, and data is a loser's game. We all just want to be empowered. We all just want to save time. And Google and Facebook for sure have business models built upon that. Coming back to your Apple question, they are somewhat dependent upon siloed information and internet, but it's a hardware company underneath it all. They sell phones and computers. And I think over the next 3 to 5 years, 10 years, the platform Android and Apple is not going anywhere, at least as it relates to me being able to talk to the internet, get my phone's information, apps, etc. Amazon Alexa is where I'm going to take this conversation to wrap up, guys, because I just was told at the end, look, the voice revolution is about to change everything. The voice revolution is every bit as important as the smartphone/app revolution. You don't have to carry smartphones in 5 years. You will be talking to devices everywhere you go. Your lapel will have a device that will interact with you. Your glasses will interact with you. Everything will interact with you. You'll have something that'll pop up a screen. If you actually want to watch a movie, you pull out your credit card sized phone from your wallet and set it down and it broadcasts it. These things are coming over the next 5 to 10 years. The idea of downloading apps to your smartphone is going away. You're just going to talk. And that is where we're going. And that's probably the most important revolution you can get in front of right now.
Is there like a major chip manufacturer or something like that that makes that kind of hardware?
Intel.
That's Intel?
It's one of the reasons I bought Intel in all seriousness is because it is powering the Amazon Alexa, the Amazon Show, what do they call it? The Echo Show. And I'm telling you guys, you don't have to download an app to the Echo Show. If I want to listen to Sirius XM on my smartphone right now, I'm going to have to download it and then log in and pull it up. You enable it to your Amazon Alexa. That's the future. I don't download it. Amazon play Tom Petty radio, God rest his soul, on Sirius XM, and it pops open, even if I threw in the God rest his soul part. Thank you guys. Be careful out there. That's the point of my story. Prepare for the bad times during the good.